All right, thanks again, Ray. And boy, Jerry's, I'm gonna use a bowling analogy. Jerry set up all the pins, and now we're just gonna do nothing but bowl a bunch of strikes. He made my job so much easier. And that was the plan all along, of course, but nicely done there, Jerry, as well. So as Ray just mentioned, we're gonna talk about how to build, test, and deploy a dynamic trading system. So first things first, let me quickly lay out 3 main objectives that I'm gonna have for this presentation. We're going to show you how to completely, from start to finish, design your own trading system. We're going to go into a little bit more depth than Jerry did, but having seen Jerry's presentation, it's going to make it seem a whole lot easier. And then number 2, we're going to actually make that Chappell's Champs Goes Ballistic strategy, that trading system, nearly 2 times better. So for the old veterans that are in the room, and I know there's many of them in the room right now that are actually using that trading system, you're going to be glad you came. And then number 3, I'm going to show you that there are in fact 2 new trading systems in the trading system viewer right now. So hopefully some of you have already spotted that and made note of it, but I will bring those to light in this presentation as well. So I've got my work cut out for me. Everybody give me a quick prayer and let's proceed. But a dynamic trading system starts by understanding that it's a complete system. The system includes a complete set of data, of rules for selecting, entering, and exiting positions, along with asset redeployment specifications. Okay. So I think the most difficult part of that for some folks to grapple with is the asset redeployment specification. So when we close a position, what are we going to do with the remainder? Are we just going to let that sit as a cash position until the next cycle in the market, or are we going to redeploy that into a new position, or are we going to redeploy that capital amongst the remaining positions that are in a portfolio, and all kinds of little variations thereof? Okay, but after you capitalize on a trade, what are you going to do with that money is essentially what that gets after. Your flow in developing a trading system must be comprised of 3 main cornerstones. There can be many, many layers of information hereafter, but these are the 3 elements that you cannot live without. So just imagine a 3-legged stool and you're sitting on it, and if someone were to remove any one of those 3 legs, what's going to happen? You're going to go boom. You're going to fall down and there's going to be a disaster. So we need to account for these 3 things to be sure in every system that we design. That is going to be the when to buy, that is going to be the what to buy, and that is going to be the when to sell. Your system and how you do that and how you put it together is ultimately going to determine your success or lack thereof if we don't do a very good job. So this is where the rubber meets the road in putting things together. We need to address these 3 quadrants, and we need to do it well. So when we talk about when to buy, that's going to be reliant on the market timing signal that you select. And those signals range from very aggressive to more prudent to conservative in nature. And we're going to hopefully maybe even do a little better job of designating some of those for you along the way here. Number 2, we're going to look for a unisearch strategy that is ideal, hopefully, for the market timing signal that we are selecting. We're going to give you some pointers on what we mean by that. But a lot of times, just high level here right out of the gate, if you have a very prudent to conservative timing model, then generally speaking, the stocks that are going to do the best, there's always exceptions to the rule. We're talking rules of thumb, folks, but they're going to be good, prudent to conservative type stocks, right? And if we're more aggressive with our timing, the more aggressive stocks are going to do better because the good, safe stocks take a little bit longer to get to grandma's house. They need that longer timing model, okay? So hopefully that makes sense even on the surface level. And I think what you're going to see is the benefits of doing it right and doing it all together here in a sec. And then when to sell. Dr. Delito, coming from the tire business, would tell you this is where the rubber meets the road. This is where you either walk away from a trade that you put out into the open market, either a winner or a loser, And our job is to manage those closures effectively and efficiently. So we want certainly to, over the course of month after month, year after year, become more and more profitable because we're choosing the right stop loss that, again, should be congruent with the type of investor, the type of model, the type of stock that we're selecting. So what we don't want to do is get into a conservative or prudent type stock and put a 5% stop loss on there. Those great stocks, boy, they can use a little bit of room to get you again all the way to grandma's house. Okay, so here's some pointers as we go along. We're going to dial a little bit more into when to buy. So on the when to buy, good safe stocks work best with moderate to conservative market timing signals. Those signals being green light buyer, confirm calls, and I would even throw DEW in there on the edges. I meant to do that in this slide actually, so you could pencil that in if you're keeping notes at home. But green light buyer, that would be either the green light buyer RT kicker or just the green light buyer. Confirm calls and DEW. Aggressive stocks typically perform better with faster signals, primary wave or DEW. So this will be handy when you're putting systems together for yourself. One of the most difficult situations for people who don't have any experience doing this at all starts right out of the gate. What market timing model should I start with, or which one should I look at first, and give me a better chance for success of putting a good system together. In terms of the what to buy, it's going to be our job again to get in and make sure that we're using searches that are consistent with either more prudent or more aggressive, what have you. So Jerry really already got into this, which is why I'm getting through these early slides a little bit more quickly than I envisioned. But I think it's a friendly reminder here on a couple of things. One, if I go to the timing, one of the things that you ought to do is study the market timing graph a bit and study it in terms of signal, and then think of it in terms of frequency and comfortability for you as a trader or investor. So there are people in this room that are going to be comfortable doing hundreds of trades a year if it means more profit. There are also people in the room that have no interest in that whatsoever as long as I can get reasonably good profit without doing all that work. And so signal is where that starts, right? So if I come in here and go to confirm calls, for example, in just the last 1 year, there has been 1, 2, 3, 4, 5, 6 signals. We've gone long, market went up, we went short, or into cash, the market went down, we went long just for a few days, short. So that's not going to cause you a lot of trauma in terms of, hey, I just got a confirmed up call. I need to think about what stocks, what 10 stocks or 20 stocks I'm going to be buying today. You're not going to have to do that very often, right? So it makes things very livable for a vast preponderance of probably this audience. Same thing with the down. I know that at some point here, I'm either going to have to go to cash and close 10 or 20 trades down in a day, or even cycle that over and go short, so potentially adding 10 to 20 more trades that day. It's still not a whole lot of trading. Then comes the stops, though. So there's still going to be some activity between these dates as well. But the one thing we know by this timing model is we don't have a very fast frequency, which means that in and of itself isn't going to have a whole lot of activity tied to it, which is good, again, for a lot of folks. Now, if I could speed it up here just a bit to DEW, I talked earlier this morning that this is kind of middle of the road. Here we had 1, 2, 3, 4, 5 up signals, and 1, 2, 3, 4, 5 down signals. So frequency of 10. So you can see it's picking up the pace here a little bit. Now, there's advantages to that, and this is where you start studying the charts. So am I getting in earlier, closer to market bottoms, and out earlier, closer to market tops? consistently at least across the broad spectrum of the 10 signals? And the answer to that question is inevitably yes, particularly if you go back and you study, say, 10 years worth of data, not just the last year. So this signal is going to do a better job at getting you in a little bit more towards a market bottom and out a little bit quicker after a market top, which yields, as you might imagine, higher profit potential just by nature of signal itself. We'll get to the stock level in a minute. So hopefully that makes sense. And then, I mean, if you're a maniac, you can follow the primary wave. I actually happen to like it. I use it quite often, at least to initiate campaigns at market turning points more so than anything. But what you love here is how close to the market bottoms and how very close to the tops these signals come into play. The penalty therein, though, is look at the frequency. If we're trading 10 stocks a campaign up and down, that means we're going to be doing exponentially more trading just on signal alone. So some of you are saying, yeah, not for me. Others of you are saying, oh man, that thing's cool, because when it hits it, man, it gets it just a day or two off the bottom and that market rips. And I know that if I'm in really good, strong, aggressive stocks, boy, I can make a pile of cash when that happens. Sometimes I'm going to pay a little price for that because I'm going to have be nimble enough to go long and short consecutively from time to time when the market is searching for a direction. But boy, when it figures it out, I'm going to be on the right side of that market for almost the entire time. And that's where the money is, okay? So hopefully from what I just said there, you're starting to figure it out for yourself, sort of where you fit. And I would say, just from the experience of traveling across the globe, all the way from India to Australia, anywhere in the US, Canada, most of Europe, most of you guys fall more towards the moderate to prudent to conservative types of signals because it's just not as much work and you can still do incredibly well. Okay? All right, so where we're going to land as I help you look at how to build one and let you into my trading room, if you will, on what are the steps Steve goes through when he puts these dynamic trading systems together, you're going to see that in action. Jerry started the process. I'm going to take you a little bit more in depth on that, though. And we're going to go with the DEW in this case. All the new trading systems I've put out this year have been with the green light buyer. I really feel that that's been the most effective system this year. DEW may be a close second, okay? And it's not so crazy that, it's going to drive you nuts. And it's a little more effective at times at really getting you in at some good prices. And there's going to be reward for that. Okay, so from there, we've talked about what to buy. And so if in looking and studying this graph, I know that the average upturn is generally maybe a couple to a few weeks in length. Do I want to go out there buying high dividend paying stocks? I might do okay with those, but do you think we could do better, maybe giving up some of that safety and getting just a little bit more teetered toward the risk side of the scale? Sure. I mean, it stands to reason. Good, safe stocks, they just don't climb up the ladder as fast as the higher growth, higher reward type of stocks do, okay? All right, so over in Unisearch, as Jerry showed, one of the great things, the further up the learning curve in VectorVest you get, there's other choices here, but one of the great things when you start is just, it's laid out for you by investment temperament, which is huge, because you can't make very many mistakes if you know you're prudent. Hey, look, I want some safety, and I know I want some high RV because I want some potential in the stocks that I pick. This is a great category. So I'm just pigeonholing where I think most people in the room stand when I build this thing with you guys, okay? Now, what we're going to do as we get there is I'm going to tie this folder of searches to that signal. I'm going to show you my process for determining what I like to see in terms of the result, looking at a number of tests to get a better feel for that, okay? We're not quite there yet, so I'm going to go back to the slides. and then inevitably when to sell. So just some general tips here. Favor wider stop combinations on more conservative timing signals. Recommendation equals sell is a great place to start, and I was so glad to see Jerry do that in his presentation. That's typically where I would start, and then start looking at some of the other choices from there. Favor tighter stop combinations on more aggressive signals and stocks, okay? All right, so let's put one together. The whole process. My fear is, being sort of the trading system, I suppose, guru at this point. Although Todd over here, boy, I tell you, he's the mad scientist to be sure. He loves doing this as well. So I'm not coming for your title, Todd. But, what we want to do is start matching this search selection to the timing model, getting some result, and then building from there. So here's how we're going to do it. Again, over on the timing tab, we go to market timing graph, and we've got our DEW signal. And so what I do typically, I still do this to this day. I guess I am slow to make the full transition over to being totally digital. I take a notepad and I write down a sequence of signals. For sake of simplicity, I'm only going to focus on one upturn and one downturn. But what I would do is go back to as many ups and downs as I feel comfortable putting in the work to do what I'm going to show next, to try to, as effectively as possible, pick the best prudent search, the most consistent performer for this signal over the recent past. I said something very important there, which is recent past. I have people, when I release trading systems that have performed really well over the last 3 years, then say to me, yeah, but when I go back 20 years and test it over that 3-year period, it doesn't do as well. It's not supposed to. Markets evolve, markets change. For example, just think about the dynamic in the stock market over the last 3 years. You went from sort of top-line growth into panic, into frenzy over stocks that had sales growth, into those are the worst thing you could possibly think about right now, more of a value market, right? So we want to focus on what's working well now. The most recent year or two far outweighs anything that happened before. And what you'll find is this is something that you have to revisit going forward. Inevitably, trading systems start to slow down as market dynamics change, right? So the cool thing for you guys, again, is we're putting, and we'll continue to put, as many good trading systems into that trading system viewer. You'll see a lot more over the coming months, so that as the market transitions, all you got to do is sort that viewer, and you're going to have something in there for any kind of market dynamics. That's really cool stuff, and I hope that you feel pretty good about that. Okay, but that should make sense strategically in how you want to think about putting things together, and why I'm focusing on right the here and now. Okay, now there's going to be people out there that say that what I'm about to do doesn't mean anything. In other words, backtesting is a bunch of hoopla on things that have happened in the past and are therefore not likely to happen again in the future. And that is a bunch of crap. I'm going to use the word, sorry. Hopefully that one's not too bad, because that's how I really feel about that. To explain that to you in the best terms I can in my head, that would be like walking into, who's the best football coach out there right now, guys? Who's the Patriots coach? Belichick. That'd be like walking into Belichick's office and saying, I know you got this game this weekend, but the last thing that you should do is study the game film on the Dallas Cowboys. Because when they come to town, they're not going to run the same plays. Baloney. When it's 3rd and goal, there's only a few plays that those Dallas Cowboys are going to run ever over the course of a season. And so while it's not 100% corollary to future performance, it's as close as you can possibly get. And that's why football coaches look at game tape, because they know that that's as close as what they are possibly going to see in the future, with what they have at their disposal. This is incredibly important stuff. Okay, let me get a sip here. Sorry, guys. Hopefully I'll make it through the presentation. Struggling a little bit. But so what we're going to do is study some game film. That's what we're going to do right here. So we're going to look at the prudent category of searches from July 19th of this current year, being long up until 8/29. Then we're going to look at the short strategies and look at being short from there to here. To speed things up, then I'm going to show you that remarkably, without having done all of the testing, they do hold up over the course of this whole year. That's a bit lucky, but you know, if you do some more work, you can find some other gems. All right, now with that being said, let's get to it. So we're going to test the prudent folder long from 7/19 to 8/29. Now this can be done actually relatively efficiently, okay? And it's as simple as this. You just come into the search tool, go to the prudent category. Right here at the top, if you don't see the folders, just click the A to Z button until you see yellow folders. Then go to the search as prudent. It's alphabetized. Click on the top search, get the date. So the date's going to be 7/19. Oh, it's over here. Okay, so let's go back here. 2022, 7/19. Okay, and this is literally what I do, guys. Run the top search. Hey, all right, yeah, I like these kinds of stocks typically. Alphabet, NVIDIA, United Health, Meta Platforms. All right, cool. How'd they do? So we'll quick test them. Now the quick test automatically comes all the way to current. So you can already start to see the benefits of market analysis, because at this point, if we just bought and held from July 19th to now, we're down. Okay, stock prices went lower. Now if we just go to where the signal came into play, and guys, on the quick dates over here, you can make your job a whole lot easier by selecting your timing model in the calendar. That'll identify the date for you visually. And I know 7/29 is the end, okay? So if I run my test, what was a 14% loser is only 2. So we minimize damage here. Not a great search so far. Oops, for the current situation, right? Let's go to best of the biggies and just rinse and repeat this process. Oops, quick test, Chappell. All right, this one's a little better. 2%. Now, some of the things that I start to look at when I'm looking at this result is not just the percentages. That's the first thing that I'm going after here. Because at the end of the day, our job is to make money, right? So that's naturally where you start. But then what you want to look at are, all right, how many winners do I have? How many losers? How big are the winners? How big are the losers? Can money management, if I can find some gold, really improve things? And what I have here is, you know, kind of a mixed result. So let's keep going. Watch this one. So this is best performers greater than $1. Not as familiar with the stocks. Watch what happens. This is what's great about VectorVest, okay? I love the sort on this one. We'll talk about it here in a second. But when we run the search, quick test them, these stocks went up how much? I can't read it, Todd.
21%.
21. Thank you, buddy. How many winners did we have? We had 9, right? 1 loser. Loser lost very little. Boy, look at that. 54%, 51%. Price points, I'm pretty comfortable with those. Nothing's like $1 or $2 or anything like that. So yeah, these are prudent style stocks. They got really good RV for the most part, decent to good, really good RS. Timings look great. It's all good. On top of that, the sort is an important part of a search. And listen, we'll create a workshop somewhere down the line where we talk about search design, because you could spend a whole afternoon or probably a whole day just talking about that. But the sort is like shuffling a deck of cards. This is for the benefit of the new folks, never seen VectorVest before, right? So you see that we're getting good prudent style stocks. The RV and the RS are acceptable. RVs are really good to excellent. Yeah? What becomes maybe the most important thing then is what 10, because there's going to be more than 10 stocks that this search returns. So what 10 am I going to buy? That's the sort. It's like shuffling a deck of cards. It's taking say there's 219 results. It's taking the 219 results and it's deciding what are the top 5 or 10 returned by the search. Okay? This one's great. It's more technical in nature, but the reason I love it, RT times CI. What might that mean? Well, we learned from Glenn that RT is a pretty cool indicator. It looks at a whole bunch of factors and determines the short-term price trend of the stock, right? It looks at the dynamics and the magnitudes and everything. But that's really cool because I know that the graphs on the stocks, when I buy them, the stocks are pushing. The other thing, the CI, he talked about that as well. I've got good long-term performance. I've at least got the best combination of those two factors, good short-term price performance and good longer-term price performance. I love that. That's the kind of stocks I love to buy. I love to buy stocks, learned this from Doc 20 years ago, never going back, you know. Stocks that just climb up that page, bottom left to top right, and that are still pushing strongly at the very end because they likely just stay on fire, guys. Was it Isaac Newton? What gets in motion stays in motion until a new outside force kills that motion, right? So, not the exact words, but paraphrased it. Now, I like buying those stocks hitting new highs that are high momentum. When the market goes up, those stocks are on fire. That's what the market really likes. We like buying stocks that are doing what you want them to do, and that's go up in price. Not buying stocks on the way back when they're going the wrong direction, because when we get in those, they tend to go down more before they start going up again. You know, we talked about that in buying low and selling high. So this is great. Happy with that. Can we do better? I don't know. Biggest bargains. Let's see. And so this is the process. I'm not going to belabor it on and on and on. Let's see how my search does here. Oh, that's not too bad, right? So Bill's best bets could be a choice. And I tend to carry about 5 searches onto the next. I'll jot those 5 down and carry them onto the testing. Because I might find when I start combining searches from long to short that some of the combinations that I didn't think were the best end up being better. So I generally take about 5 from each category. Okay? So you just keep doing it. What's Chappell's chumps? Oh my gosh, that better do well or I'm going to run and hide. 16%. There you go. Good search. Okay? And that's in the Chappell's Champs Goes Ballistic, right? So we have a pretty good idea that search does what we want it to do. And you just keep going down the list. Heavy hitters, you know, test the whole thing. They're all prudent searches. And then what you would do again, if you are willing, is do even more testing over more time frames and walk away with that list of 5. All right, then you do the same thing on the short side. So let's go back to the graph here. And the short, remember, this is great because it's recent, you know. I'm going to show you what the hottest short strategy is in the database right now, or at least as far as I got on my testing before I figured, well, you know, we're showing them the process. So 729 to current. I'm going to come up here to the top. We're going to change that date when I can to 729. Give it a second here. Something must be hung up. Woo, market rolled over. Market's not closed yet, but it's lower on the day now. Goodness gracious. That's good for Steve, though. All right, let's see here. Let's go to 729. Or I'm sorry, 826, sorry, 826. I need DEW. 829, yeah. All right, let's see here. Quick test these. Yeah, so I might have cut that end date short on the last bit, but that's fine. You get the idea. We're running signal to signal. Now we're also going to need to go to the short searches here and start going through that same process. Just go one after the next after the next. I should not have run this strategy again. That was a mistake. This is a more rigorous search to find really good, heavy hitting stocks. It's got some pretty hefty criteria in the search itself. All right, so hopefully it'll jostle back to life here pretty soon. Seems like we're getting about to the amount of time it was last time. Shouldn't have ended with that one. There we go. All right, so I'm going to go to search as short, right? And we'll go ballistic highs short. So this is, again, part of Chappell's Champs Goes ballistic strategy. We'll see how that one's been doing here recently. Hey, pretty good. 11%. How about, now this is one that if you're new, may not make sense until I explain. So when you short a stock, what you're doing is borrowing the stock from another shareholder, right? And there's a cost to that. But when you redeliver the stock, you can keep the difference. So if the stock price falls, say $5, you're going to keep those 5 points, deliver the share back to the owner. He's happy. You're happy because you're getting $5 in the process. Okay, so when you short a stock, that's not the best description I've ever given, but when you short a stock, you're expecting the stock price to fall. There's actually an interesting documentary on the whole GameStop thing that just hit Netflix yesterday. That does a pretty good job of explaining short positions as well. But anyway, this is actually good. When we short something, we're expecting the underlying stock price to fall. And when it does, we keep the difference. Okay, so 19 down to 12 is actually a 34% gain in our pocket when we return that share. LQDA, 29% gain. These are actually the losses that would be incurred for being wrong, okay? All right, so not too shabby. That was about 11% net on the short side. So let's go to the next one here, crash landers. All right, 10% here. Boy, have some hefty losers. Have some better performance on a number of stocks, but so that's one that might get a lot better with good stop losses. See what I mean? So I'm looking at that and I'm saying, hey, there's something maybe to work with here on crash landers. All right, let's go to Doug's Downers. 16% here, and 8 out of 10 winners. And so this is the process, right? Where's Hindenburg? Hey, best yet, look at that sucker. Man, I can really not read that. You guys are having no trouble at home. Believe me when I say I could barely see it. But I think it says 25.91%, and if we're short, it's actually gain versus loss. And look at the massive amount of winners here and good percentages across the board. So I'm left with somewhat of a dilemma. Some might think crash landers, looks like with some good money management, might do a lot better than it's done. Or Hindenburg stocks, where with no management at all, I'm pretty happy with the result. I am the man of least resistance. I'm going Hindenburg stocks in this case. But if you had a couple of searches with very similar results, so more similar than this case, right? I might look at both of them extensively to see what could be done. So hopefully all that makes sense, right? And so I end up with two searches. I end up with Hindenburg stocks and prudent performers greater than $1, right? So we now leave those two tools. We leave the market. So the first tool was the market timing graph. That's where we got the signals. We jotted down some dates. Then we came into Unisearch, focused on the prudent folder because we're prudent, and said, all right, here's 5 searches long that we like and 5 searches short that we like over a number of signals. Then we head to the next place. And this is all in your PowerPoint. What we're going to do now is step 2, which is refine the baseline results using backtest. We're actually going to create a baseline, and then we're going to refine it, okay? So what we do is we come over here into Backtester. This is generally where I have my whole game film football coach discussion, but I already beat myself to the punch. Backtesting is absolutely worth it, guys. I mean, it really is. I could not have done as well in the stock market as I've done without it. I can just tell you that flat out. Okay, I'm going to go to backtest an idea here. When I do that, we're going to call this baseline. You can also, if you prefer, just put the names of your strategies in there. And in fact, I'm going to go ahead and do that. Just make things real simple. So we're going to put prudent performers. And, oops, money. Yeah, show me the money. Prudent performers and Hindenburg stocks. Oh boy, I don't know if I can spell Hindenburg. Hopefully that's close. When we talk about Hindenburg, you guys remember the giant air balloon? Yeah. So when we say Hindenburg stocks, we're expecting stocks that are catching fire and plummeting. All right, let's see here. So next thing we do is build it. Okay, and so you can select an existing system. So that's where you can pick them right out of that trading system viewer. You can pick Chappell's Champs Goes Ballistic. You can pick a couple of the new ones that I just put in there or any other one. And you can then even begin to refine it. Or we can build our own. So I'm going to click that one. Remember, we use DEW, right? So step one is done. Just come right out here, DEW. If you need to bone up on the reason the signals are generated, all the rules for the signals are listed here. So this is a great little resource. Some of you might even copy some of this, put it on a document so that you can refer to it later, maybe in your rules document for your trading system. Okay. I'm going to go to the next step, which is let's plug in the long search. So the long search was in the prudent folder, right? We just go down here to search as prudent. Click in best performers greater than $1. They're well greater than $1 if we remember. So don't let that scare you. Right? We don't need any stops yet. All that stuff, all the stuff on stop criteria and more settings comes next. We just want baseline. What if I bought and held prudent performers over all the upturns, or shorted and held Hindenburg stocks over all the downturns? So on the rules down, we're going to go to search as short, and we're going to go to Hindenburg stocks. Okay? And we can finish this up. So that's my system. That's the baseline. So with no money management, no rolling up of buying power, no fancy schmancy dancy, just bare bones. I get an up signal, I buy 10 stocks long, I close them out when I get a down. I also, when I get a down, not only just close those stocks out, I go short with 10 positions. Okay? How do we do? Let's see. We're going to go for the full year. We're going to wing it. Always start with the most recent signals as a tip. If you're going to do any of the quick testing at all, which you should. Otherwise, you're totally flying blind here and are going to get often very lackluster results for a long time until you stumble across something. Always focus on the most recent signals because you at least want your systems to be working now. So the more, start from the right and work back. Okay. All right, January. Let's see here. Come out to the right. DEW. When did we start? Oh, 22. That's why. We got to go to 22, man. January 5th. January 5th, 22 is when we're going to start. Okay? And let's run it, see what happens. This is the fun part. I used to love video games. I can't help it. It was a lifetime ago now. I don't want to liken this to a game, but this is a lot of fun for me, We'll see how this result comes in. This would be great for your kids if you can get them started on it now. Maybe fund them an account with a few $1,000s, and boy, I tell you, in about 30 or 40 years, they're going to be happy you did. And they're going to have a lot of fun along the way. Very educational set of tools. Okay? So this is looking at being long, being short off of that early signal in January. Then we went long, didn't do as well as we would have hoped, went short again, made a little bit of money, went long, made a little bit of money, went short, didn't do as well, and so on across. So can we make it better? Although, let's say we didn't do anything to this whatsoever. This is this year, I'm going to say this very clearly. This is this year's performance. How many people, this is with like no fancy schmancy stuff whatsoever. How many people are up 52% this year? And if you are, you're probably in most cases a VectorVest subscriber. This is the kind of thing that you're doing, right? It's pretty impressive, I would think. So going back to my early discussion on buy low, sell high, where the experts, I think, cause more confusion than they should is saying, you can't time the market. You absolutely can time the market. And I guarantee you, if they don't believe in it, which they probably really do, they're not making money this year at all. Right? Because they always have a long bias. Market has done nothing but go down. Here we are, we're up 50%. And it can get better. So let's work at it. Now, just like a scientist, what you don't want to do is say, all right, man, this is great. You get all fired up and you get in here and you say, I'm going to edit this thing. And you get into customized trading system and you say, all right, I'm going to modify all this stuff. I'm going to put a stop on this one. I'm going to put a stop on that one. I'm going to say no more than 2 per sector over here, 1 per industry over there. And I'm going to do all this stuff and run another test. No. You're going to have no idea what helped you, what hurt you, and everything in between. Remember back to grade school. There's a control. The control is your baseline. And when you adjust anything in that experiment, you do it incremental and you do it one thing at a time. Otherwise, you have no idea what helped and what didn't. Okay? So what we do is we come on the long side and we say, all right, I'm going to go to percent gain loss. I know you guys are getting tired, so I'm going to start skipping to answers. Anybody say amen? All right, there we go. 99 gain, 10 loss. Let's see how that does. Hallelujah. Right, Glenn? Amen. Amen. I meant to copy it, okay? But that's okay. So generally speaking, what I like to do is keep that baseline there so that I know if I've increased the bar or not. And I want to look at several factors. I want to look at winners. I want to look at percent gain loss. I want to look at commissions. I want to look at max drawdown. And on that subject, what I generally do, here's another tip. I set this is up in the account settings. I set this commission to 1. Most of us don't have commissions at all anymore anyway. The reason I set it to 1 is so I know how many trades are actually happening without having to calculate $4.95 a trade. Okay, so I'm going to finish and rerun this one. That way we get a total idea of how many trades so far this year. That's in and out, okay? So half the number is round trips. So we had 71 round trips. 71 buys and later sell or short and cover. 71 round trips, okay? Make sense? That's not that bad. It's like 10 a month, less, right? Acceptable. I can deal with that. Some of you are like, man, I made hundreds of trades this year already. Some of you are like, I only bought 3 stocks all year long. Well, this is the way to grandma's house. This is what's going to get you to the 50%, okay? All right, so let me copy this again. Now we work on the short side. We'll go over here, say, all right, Steve knows some of the answers, so he's going to skip saying, all right, I'm going to do a 10% trailing stop, then I'm going to do a 15% trailing stop, then I'm going to do a 20% trailing stop, then I'm going to do a recommendation, not a sell, and then I'm going to do a RT goes back above 1, then I'm going to do there's all these fun things to play with, okay? I'm just going to start giving you answers. Hallelujah. Because I've already done a lot of that work, okay? Not all of it, enough. So I'm going to go to gain loss. In this case, we're going to use 99.20, I believe. Boy, I hope I wrote that down right. That seems a little high. But I think I'm thinking about one of my trading systems. All right, so this is 99% gain on the short side or a 20% loss. Now, one thing that you just figure out over time is sweet spots. And over the last 20 years, I've learned that if you go out there with tight stop losses on short positions, you're going to have a tremendous amount of turnover, and it's like a funny car trying to get off the starting line. And eventually that sucker goes, you know. But a lot of times, if you don't give it that much gas, or if you give it more room, in the case of the stop loss, you get off the ground a little bit more easily on the short side this way. Okay? So what we're going to do is finish and run it now and see how we do. Mama mia, what does that one say? 92, 92% this year. Yep, that's right. We told you when you came to this course, you could see systems that outperform the market by what, Ray? 20 times? The market hasn't even gone up this year. This thing's up 92%, man. Nobody's excited about that. I mean, I say that even if I'm at a show because everybody's at this time of day is just like, and I can't believe it. You know, I'm sitting here saying, look, all you got to do is follow the plan. You know what gets in the way of making this kind of money? It's right between these two fingers. You either don't believe you can, right? Or you get in the way. The more you can remove this from what you're doing, the better off you're going to be. And I get it, guys. Listen, I started with VectorVest 20 years ago. And when I started looking at this thing, I said, oh my goodness. You know, there's a lot of stuff here, and I can already tell because I've looked at my stocks in the system, and boy, I should never have bought those. And the ones I should have bought, you know, they made a lot of money. But I'm not so sure. You know, maybe they just got lucky here over the last year. Guys, I've been doing the same thing week after week after week, year after year after year for the last 20 years, showing people this process. There are people in the room. I hope Kirby's in there. Maybe some others. Chime in. Let them know, man. When you start actually doing this, I've been so proud of Kirby recently, man. That guy is really, really doing it right. When you start believing and following, it's unbelievable what this means for you. Okay? 92% this year. How many people did that? Now, without options. Well, I made 200. Well, if you did, you probably did options or something. You know, triple leveraged contra ETFs and whatever the case may be, right? This is just with stocks, man. This is just stocks. 168 trades. That's like 84, what, 80, is it 84 round trips? I don't know, I suck at math. Ever since the advent of computers and calculators and everything, I don't have to do those math tables anymore, right? It's 84 round trips, right? It's nothing. Well, I don't want to do that much. Well, then what do we do? If we don't want to do this much activity, what do we need to do next? We need to go back to square one. We need to go back to market timing graph. What do we do there? We go to the confirm call, because that's going to cut that number probably in half just by itself. See what I mean? It's got nearly half as less signals, right? It's probably going to put a big dent in that, right? But I need to make sure that those strategies work well with the confirm calls. We didn't test them on confirm calls. May blow the whole thing up, right? So you start back with that prudent folder, confirm calls, and work your way up from there. That's how you do it. That's how you put systems together. Then what you do from there, once you're happy with your result, is you convert that to a portfolio. People always ask me, there's two settings here. So you can start with an empty portfolio, or you can continue from the end of the test. Which one do I do, Steve? There are two really solid choices here. If you're in the middle of signals, like if you've just a couple of weeks ago had a down signal, right, and you want to get out there in what's probably the most effective way, I would suggest continuing from the end of the test with the mature trading system. What's usually best practice is to wait for the next signal and to start with an empty portfolio and buy the new ones on that new signal. Does that make sense? So like for confirm calls, you can have year-long campaigns. Right? You're 3 months into a confirmed up call. The Fed is lowering interest rates like heck won't have it, sending a lot of money into the economy, right? And you know that that sucker's just going to keep running. You want to continue from the end of the test, typically. Go with that hot trading system that's already going, okay? If you're at a fresh signal, start empty and go from there. Now, I'm going to start empty for one reason only, and that is so I can show you the next piece. So you like your plan. Now the question becomes how to implement, how to follow and implement the plan. The market's closed. I envisioned having this done before, but it's still populated. Good. So it sent me $10 stocks here for today, looks like. Yes. Okay. So not off to a great start because today was a mild up day. That's okay. I did this I would have started from the end of the test, and I think we'd be sitting on a little better result. Now, what I want to show is if you go to the top, click on Tools, and go to Application Settings. I should have done this first, but there's an Alerts tab. And on the Alerts tab, I can send Clay Royer all my alerts. That'll be awesome. Or I can send the alerts to myself, and Clay will be really happy that I did. So instead of that, we'll send them to SRC. This is not my real. So before you start jotting this down, this is not my real email address. It's stevec@VectorVest, okay? It's not real. If I go down here, though, I could send portfolio alerts. I could send summary alerts. I want the orders, you know? I want the orders. That's the most important thing. I want the orders. Now, when I click that, I got to know that if my system says, hey, today, one of your stocks hit your gain loss of 99.10 on your long campaign, you're going to get an email. It's going to say, ABC stock hit gain loss at X price. You need to go to your brokerage. You need to close that position out, and you need to open a new one. All right, and when you do that, it'll also automatically send you the replacement position, even if you don't do it. So you'll have both the one to exit and the one to open if that's what your plan calls for. So that's really cool. The alerts aren't going to show down here right now, but here's what an alert they did. Here's what an alert looks like. Let's say we just had a DEW down today. All right, it says, all right, what we need to do is sell short 10 stocks of EVIL at or as close to $9.50 as we can get. Now look, you don't have to put it in at $9.50. Just take whatever a reasonable price is based on the current situation when you get to the alert. The goal here is not to be to the penny dialed into the exact numbers. This is like your coach, and your coach is saying, do what you can to short 10 shares of evil now. That's what your coach is telling you to do. See what I mean? The goal is not for your VectorVest 7 account to mimic to the exact penny your trading account. And what matters is your trading account. So just get that order in as quickly and effectively as you can so that you can try to stay on tap as quick as you can. Now we do have another application. It costs more money, which is why I'm not going to spend a lot of time showing it or talking about it here. That's all you need. What I showed right there is all you need to get going. But we do have one that links through an API to 3 brokers, which are TradeStation, Ally, and Interactive. And that tool will actually help get everything organized to where you accept the orders and send them back and forth. So if you're somebody that's in a position willing to spend another $2,500, right, and have that kind of hand holding, just clicking the OK button, we can do that. So that's an option for some of you. It is a more expensive tool than any of our other tools, okay? But it's there. Listen, when I started with VectorVest, remember AOL? I had to click a download button and it went brr, 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 like 15 minutes. And then it had to crunch the data, you know? And then about 37 minutes later, it wasn't that long, but I got my update And then the next day, I went to my broker and did the order, and guess what? I'm still here today. That's okay. It's going to be fine. You don't have to get it to the penny, the second. You don't have to get to that level, guys. This is your coach. He's going to tell you what to do. Just follow what he says do. That's it. It's that simple. As quickly and effectively as you can. There's no rush. You don't need to barrage. I can't get the order across in 30 seconds. I used to do it the next day. Took forever to bring up the dang brokerage account, find the dang ticker I needed, put in the amount of shares, and do all of that work. This thing right here tells you price, shares, symbol, everything you need. Right there. Cool? Cool beans? I hope so. If it's not, tough tiddlywinks. Right, Glenn? Amen. All right. Rounded third coming home. Todd, you going to be awake?
Yep.
All right, here we go. I promise you we can make Chappell's Champs better. Contrary to the aforementioned Jerry D'Ambrosio in this case. In fairness, he didn't know that I spent the better part of a week really cracking down on that thing and spending a good amount of time with it and made a few very interesting discoveries. So this is going to be good for some of you, for sure. Pay attention. Don't fall asleep. Okay. All right, so what we're going to do is come over here to Backtester, okay? And we are going to, in this case, create a new one. We're going to use an existing. We're going to refine an existing system. So some of you out there that like to tinker, this part of the presentation is for you. I want to start with a great, now listen, you can blow up a good system here if you're not careful. So, you know, don't be dismayed when you do something like that. But there's also reward to be found. If you want, look, you can just take the trading system and go. And honestly, what is it, Pareto's Law? 80% of the result with 20% of the effort? That's 80% of the result with 20% of the effort, okay? Just take the ones that are there. And it's a whole lot better quality of life for some of you. That's why they're there. But for the others, the people like me who like to get in here, see if they can discover something new, something that's going to change the world, you know, you can do it. So I'm going to come down here, I'm going to click select. And that puts my system in there. Now I can come in here and customize. We're going to have some fun. I might just get the answers here. I don't know. Actually, let's not even modify it yet. What we're going to do, we're going to run it over the last 3 years, show you how good this system really is. Okay? Then we'll modify it and show you how much better you can make it. All right, so here's the last 3 years. We're going to start on the first signal. Now this is GLB RT Kicker, different system. We talked about that one. Jerry showed it as well. So I'm just going to let her fly. Watch this one. This one's going to be fun. You ready? Here we go. I'm going to blow it up. I'm going to take off all those ugly markers. We're going to watch this sucker go. Oh man, look at that, Todd. 27, 20. Oh my, it's coming back. Here we go. It's like an uptrending stock. It's got higher highs and higher lows. We like that. Oh, whoa, 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 whoa. There it goes. 52, 57. What do we got? Oh, came back to 42. You son of a gun. Oh, 80. There we go. 92, 97, 101, 108, 131. Holy moly. Where she stops, nobody knows. Right through the COVID collapse. What COVID collapse? Did anybody see the COVID collapse in there? Barely. It's not going to be the biggest drawdown in this portfolio, I promise you. I don't think. It's close. Oh man, what does that say now?
A lot.
Holy, is that for real, Glenn? That's 370%, 400%?
Wow.
Some of you saying you can't do it. You better believe you can. Chappell's Champ stocks, these stocks have incredible volume. Very reasonable price points. I don't care what size account you got, you can do this. Period. There are people doing it. 713%. There you go. This is the heavy drawdown this year. There was one stretch there, June, like right into June, where the market got a little squirrely enough to cause some signal issues. Okay? So again, that goes back to there ain't a thing on this planet that is going to be perfect 100% of the time. But I'll be darned if you're going to find anywhere else where you find automated systems picking this caliber of a stock. Picking this. What kind of stocks does Chappell's Champs pick, right? What's the whole, well, this is short right now. Okay, Jerry covered there's 8, you know. What caliber of stock does Chappell's Champs, he covered it, I'm sure. Cheniere Energy. New Fortress. I mean, we are borderline high quality retirement stocks. Energy Focus, to be sure. This little San Juan Basin is a little hidden gem. That little sucker right there. Okay? All right, anyway, that's the kind of stocks Chappell's Champs finds consistently. Look at the RVs and the RS numbers here, man. Look at how much money these companies are making. It is bananas. Look at the earnings growth rate on these guys. Look how quickly you got to the answers, right? Now, remember, we're in a down right now, so this is going to be great when markets get on a roll again. All right, anyway, enough of that. I think that needed to be done. I think I needed to bring you into reality, because some of you are thinking, you can't do that. You're probably not going to get 737%. What if you got 524? Hell, what if you got 162? You think you can get that much out of 700? I sure as heck hope so. The only way you can't is if you don't listen to anything the thing told you to do to begin with. Okay? That's real. I'm not kidding. All right. Let's get out of here. Let's make it better. You guys are like, man, this guy promised, he better show it. This guy promised me, he better show it, man. All right, let's have some fun. All right, I'm going to copy this, and we're going to make some changes. I'm going to get right to the answers. Watch this. Now, I did this over a sequence of like an experiment, one thing at a time. Okay? Watch this. Forget Profit Locker Pro. Watch this. We're going to go recommendation, not a buy. When we buy a Chappell's Champ stock, which are buy recommended when you buy them, I think at least typically, and they go to a hold or a sell, you get rid of it. So we're not even waiting for the sell recommendation. If it turns into anything but a buy, we're going to get rid of it. Now I got news for you on the short side. We don't have not a sell. So I might have to ask the programmers to look into that. But when you short ballistic new highs, they have buy recommendations. That's the nature of the search. So I can't do anything that cool on the short side. I wish I could. And I got to be honest with you. I don't think anybody's going to find any better way to manage ballistic new highs than that Profit Locker Pro Stop, because I have run hundreds of iterations and cannot find one that's better. Okay? Period. So there's probably one out there somewhere. You can't possibly test everything, and it's probably esoteric, and it probably doesn't make sense to begin with. The other thing that we're going to do is we're going to go to 5 stocks. We're going to go down to the shorts. We're going to go to 5 stocks. We're going to finish and run. Watch this baby go. So if you guys think the systems that we put out can't be improved upon, now I will be first to tell you here, the compounding effect from not having to buy 10 and reducing that number to 5 is almost like cheat mode, is what the kids would say on the video games. It's like stealing. But the trick is, you can't do this with like penny stocks, or you get into a situation where you're buying more shares of a company than you really can. You can do it with Chappell's Champs. The short side, that's a little sketchy over time, where we're going to be towards the end of this test anyway. But look, whether it's 10 stocks or 5, I think, what are we talking about, Ray? We're talking about going from 191% annualized with a 26 draw to 311 annualized with a 33 draw. Now, I got to be honest with you. I heard Jerry say something earlier in the first presentation, which was, that's a pretty high drawdown. You can't get to 300% annualized with a 10% drawdown. That's not going to happen. You can't get hardly to 200% annualized with less than 25, which is what that is. That's just the nature of the beast. You start getting down into 30 and 40% returns, which we have systems that do that. You know, the drawdowns can come in a little bit, and they can get down there to where at any one time it's only 15, 16. You know, anything south of 10 is super hard to find. Let's talk money managers for a second. You ever heard of a CalMAR ratio? That's what money managers love. And they love for their CalMAR ratio to be round about a 2. And a CalMAR ratio is the compounded rate of return divided by the max drawdown. And they figure they got a pretty good system if you have a CalMAR ratio of 2. So what you have here with that 300% annualized rate of return trading system is a 3. What you had before the changes was a 3. I haven't been to school in a while, but I'm pretty sure that 3 is better than 2. The longer your test bed, so this is a 3-year test, the more realistic these numbers are actually going to be. Okay? Now, I don't ever think there's reason to go back more than maybe 5 years at the outermost. But the further you go back, the more detached the current situation often is from then, okay? And so these are actually incredible, stunning. If there are money managers out there, right now they're like, what? Okay? These are stunning. Can I do better? Can we make better systems than that? You bet, you know, we will be. The answer to that question is yes, and we will. All right? I've just recently started to tackle this monster again, and I'm having a lot of fun doing it, and I'm stumbling across some things that down the road are going to blow your mind. That's what we do here at VectorVest. We don't rest on our laurels. We're always working hard for you, right? And we do it because we love it. I don't have to be here. I can promise you that. For those that are wondering, I don't have to be here. I don't. And I owe it all to, Doc, I hope you're watching, because I owe it all to you, man, 100%. That's real. Okay? I get emotional when I start talking about that. But anyway, I'm going to have to get back. I'll collect myself here a second. Final guidance. Oh, 2 new systems. Viewers. Trading system viewer. There's a new one called the Comeback Kids and Ballistic New Highs Short. It's up 36% so far this year. If you go back, look at the trading system details here at the top, as Jerry showed you. This one is dynamite too. Very consistent, very steady, very little trauma in the COVID collapse. Again, it's like, what trauma? There's none, right? Drawdowns have not been near as prolific as even Chappell's Champs. Very solid system. Currently it's short. Here are the positions that are in there. So it uses Comeback Kids on the long side, and it uses Ballistic New Highs short on the short side. It does not use Profit Locker Pro. Some of the people in the chat right now better be saying hallelujah. For those that don't want to up to that product, which, by the way, I still think has a lot more value than people realize. But this is just bare bones VectorVest, man. Search, general stop criteria. And 65, that's going to be a hard number to beat, based on the testing that I did anyway. Okay? It's optimized. It's good. All right, let me get out of this one. Get out of this one. Another one. I love this one. Biggest bargains. No-Mo Mojo. Any of y'all watch Kramer? I think we got No-Mo Mojo from Kramer. I think. He was talking about Mojo at some point. Or maybe it was Austin Powers movie. I don't know. We do so many funny things around here. But these are stocks that they don't have earnings no-mo. They got no-mo mojo. Okay? And they're parabolic, and when the stock market goes down, boy, they go down with it. And so if we look at trading system details here, again, you're going to find a very, very nice curve. Wheels came off a little bit here. In 2000, this was the growth transition. Even some of these very resilient biggest bargain stocks got hit there a little bit, I believe. But boy, this thing's back and moving again. So that's the best two I can get in there for now. My goal is going to be to put another couple in there as often as I can for the remainder of this year and into next. And just keep putting more and more new blood in here so that no matter what the market throws at us, man, we're going to have things when we come in here and we say, all right, what do I pick now? Hey, man, I want ones like this one, you know, that are making money over the 1 month, the 3 month, the 1 year. Look at that sucker. I want to be short. That's what it's telling me. I want to take advantage of market downside is what that's telling me, right? But you want good numbers all the way across. You want these snap charts out here to the right to be as smooth and steady as you can find them. And you want to go with those kind of strategies. I generally like to start with the 1 year, backfill the others, right? And you're going to be in good water up here. All these make sense. Each and every single one of them, okay? And that's all I got to say about that. That's what Forrest Gump said when he got the box of chocolates, I think. So I'm going to wrap it up. And I hope you enjoyed this, guys. I'm going to give you some final pointers here. Favor smooth. This is what I was just showing you. You want to favor smooth, steady metrics. You want to favor smooth, steady spark charts, smooth, steady back tests. The smoother, the steadier, the better. You want Kalmar ratios greater than 2. You can do it. You can pick the ones we got. You can make your own. But you want to you not only want to outperform the market, you want to outperform those money managers even. It's not that hard, okay, with VectorVest. It really isn't. Is the system making money year over year? Once it starts to break down, you go back to square one, make another one, or find another one that's working well now. Focus on the annualized rates of return that make sense for you and your capital. Another thing I would say is I often, at this point, certainly begin to break my capital up into different buckets. You can have a Chappell's Champs Goes Ballistic, along with a high relative safety, along with an options portfolio, and everything in between. So you don't have to lump all your money into any one thing once you start to get larger and larger accounts, and where some of those drawdowns might. That means, Steve, that at one point I was down about $2.4 million before I went higher again. I get that. Just start breaking it out. High relative safety stocks, Chappell's Champs Goes Ballistic, options portfolio, whatever your case is, okay? And then maximum drawdowns are always something to look at. Jerry went through that. Guys, before I send it to Ray, VectorVest is all you need to deploy, monitor, and manage a dynamic, rules-based trading system that can beat the pants off the pros in the stock market. You heard it here first. Over to you, Ray.